Yvonne from AWS, and welcome to our office today.
It's my great pleasure to welcome you to join the PayFi Rewrite Forum, Building Trust for Next-Gen Payment, co-hosted by OSL, AWS, DMZ Finance, and Benza, right here in Singapore during the exciting Token 2049 week. This week, the global spotlight is once again on Singapore, where thought leaders, innovators, institutions across the digital asset ecosystem gather to share your ideas and shape the future. And the forum today is a unique side event, one that brings together voice from traditional institutions and also DeFi companies and also payment infrastructure.
Yeah, so as the digital assets market develops, traditional finance institutions actually increasingly emphasize compliance, regulatory, and robust infrastructure. This is exactly where the vision of PayFi becomes critical nowadays. So in the next few hours, we will hear from the leaders who sit at the RWA, AI technology, DeFi, compliance, and settlements. They will explore the future of the digital assets together with us in the payments and the real-world application challenges. So once again, welcome everyone, and let us begin this journey together. Thank you.
Thank you.
And to officially open today's forum, it's my honor to first invite the CEO of OSL Pay, Jingwei, to the stage for his keynote presentation. This keynote will share how OSL's vision for PayFi and its role in global payment. Please welcome Jingwei to the stage. Thank you.
Thank you. Should I use this mic or this mic?
Both works. If you, which one do you prefer?
Oh, it's okay, it's okay.
You can use this one.
All right. Good afternoon. Can you hear me clearly? Okay, good afternoon, everyone. It's a real pleasure to be here with you today. Hello. So thank you for taking the time to join these sessions. And I know that there's a lot happening at this event right now, and then I'm truly appreciate that you all is here. And then let me briefly introduce myself. My name is Jingwei. I'm the CEO of the OSL Pay. Okay, today I'm here actually to talk about something we believe is more than just a trend. It's a shift that we call the dawn of the PayFi era. So finance is actually entering into a new chapters, and payment must also evolve to keep the pace of the Web3 era. And OSL Pay is actually leading the way in shaping these transitions. Okay. And what problem is at stake right now? We found that 80% of the institutions see regulatory uncertainty as #1 barrier and also the biggest challenge in the industry right now. So traditional finance and also the digital asset are diverging paths, and institutional demand to see and meet the compliance regulation requirements right now. And for us, our vision here is to deliver a seamless, trusted bridge between the traditional finance and Web3, provide a native user experience, growth-driven, user-friendly, and also the entire end-to-end solution as a payment solutions right now. So we are not just an API, SDK service providers, but we bring 20 years of the field expertise from traditional finance and also crypto world to help our institutional and partners to scale through the users and product-centric operational and growth campaign. With the professional team that we have right now and also advanced technology that we have, we will be able to empower institutions to thrive in a truly borderless economy. So what are we currently solving? Compliance is a foundation of everything we do. And we are committed to securing and maintaining the payment operational license as well as the compliance framework to give our partner peace of mind. Okay, and we are expanding our licensing globally right now in a major jurisdiction, including Europe, which is, I think we're all familiar, like MiCA application right now, right? And also Africa. Asia, we also have the license in Indonesia, we have in Japan, and we are expanding in Latin America and North America as well. And we are offering beyond the payment solutions, okay, but also provide the expertise in field operation and growth strategy execution. So firstly, we are offering, oh, shall we?
Sorry, maybe the PayFi is too hit, so we managed to interrupt the alarm.
So shall we continue?
We are investigating the situation.
So we'll be on hold for a while, is it? All right. Mm.
Ladies and gentlemen, your attention.
applause alert. So maybe you guys can come back to the seat and then we can continue our conversation. Yes.
All right.
Ladies and gentlemen, your attention please. We have investigated the fire alarm activation and are pleased to advise it is a false alarm and no
Alarm.
cause for
It's okay.
concern.
All right. So yeah, okay. So we are offering beyond the payment solutions because we also provide the expertise in the field operational and also the growth strategy executions. So that there's a difference with us and others. So we offer the native field on and off ramp experience. We connect the local real and also the global strong liquidity together. Okay, and we always stay compliance in our mind. So we ensure 100% AML and KYC compliance align with the local regulations and requirements. And in terms of the growth operational, so we dedicated a specific operational team to help the institutions achieve the revenue growth. All right, let's look at some numbers here. Okay, so OSL Pay, we have millions of retail users right now transact over our OSL Pay ramps. Okay, and we are supporting 120,000 okay trading pairs, and also continue expanding our the trading pair to our ecosystem with our partners. So people ask us, how do we drive the institutional growth, with our local reals? So based on the data, in average, 14% of the fiat users has been converted to the active crypto users with our partners, and 20% of the transaction volume growth per quarter with our partners. So this reflects the scalability and revenue upside of our partners can be expected when leveraging our fiat real. I will show you some figures. There's another set of figures that that is quite interesting. So our payment solutions actually achieve 70%, 76% transaction success rate on average. So we have about 40,000 daily orders has been processed with our platform, and with $20 million in daily transaction volume. So our fiat on and off ramp solutions are built for growth, helping our partners to reach the revenue faster. Okay, so here's some of our key partners. All right, another very, very good news. Okay, so we are actually building a global compliance payment ecosystem with our brothers, new family members, Benza. Okay, so yeah, and OSL Pay and thanks. Woohoo! So OSL Pay and Benza brings together the global coverage and localized solutions. With Benza, we could actually offer our solutions even in US. They are covering quite a majority of the state, okay? And together with OSL Pay, we are actually strong in emerging market. So this is a perfect marriage together, yeah. So we truly appreciate, Benza team, trust on us, and let's build the next PayFi era together. Okay, what is coming next before I invite our good partners, Benza. So for OSL Pay, we are designing a lifestyle-driven payment solutions. The motto is to bridge the Web3 with our everyday finance need. So all-in-one finance with a single click. That's our goal. And we are also expanding global high-growth market, such as Indonesia, Vietnam, Turkey, Latam, Africa, etc. So at the same time, we also have the cross-border. Okay. At the same time, we also have the cross-border payment solutions under the BizPay, and OTC solution under the global scale. And coming soon, crypto as a payment, and also card issuance, and also some other very innovative product will be launching together with Benza. To wrap up, the PayFi era is just the beginning. So, and it's full of opportunity. And with OSL Pay and Benza, we are excited to, to help together to shape this future together with our partners and the wider ecosystem. Last but not least, let me invite the founders and co-CEO of Benza, Holger and Jeffel, to be on the stage with us to celebrate this exciting partnership.
Okay, hi everyone. I'm Holger. This is Zafar, my co-CEO. Just wanted to say a quick thank you to Jingwei and the OSL team. Thank you for the warm welcome into the OSL family. Look, we built Banxa about 10 years ago in this crazy crypto industry. We've built so many payment connections in many different countries. We've acquired licenses, money transmitter licenses in the US, UK, Europe, Canada, Australia. So we've created a really strong footprint of payments and licenses. We have millions of users around the world. We serve 300 of the biggest companies in crypto, Trust Wallet, MetaMask, OKX, you name it. And it's been an awesome journey for us. So OSL came along early this year and they connected with us. They saw the value in our business. And they saw how we can complement their portfolio of licenses and payments. So while Banxa has amazing payment connections in many Western corridors, OSL has built many payments and licenses in developing countries, such as LATAM, Africa, Asia. So it's been a perfect complement of our licensing portfolios, and together we can serve a much bigger footprint in the world. What Banxa needed was a big brother to put really a rocket under our company. And what we realized quickly is that OSL is not just another crypto stablecoin project like I have in all my LinkedIn feed. They're actually a freight train. And they're moving very, very fast. Within 12 months, they've onboarded 400 employees. They're now at 600. They've done 5 acquisitions in countries like Japan, Germany, Italy, Canada, where we are listed on the Toronto Stock Exchange, and Indonesia. So not easy countries to make an acquisition, but they're on a mission. And they're also running a very successful business. And they have big ambitions, but like I said, it's a freight train in full swing. And for us, it's just really exciting to be part of this. So I want to thank everyone here for coming, everyone in the Banxa and OSL team. And I'm very, very excited to look at the next chapter, which is, I believe, the best to come. Thank you.
Maybe you guys can move forward to the middle and we can take a picture together. Yeah, all of us are actually looking forward to the partnership between OSL Pay and Bansa. Thank you so much. Yep. So thank you, Jinwei, for the insightful message, and we are really looking forward to the partnership. So yeah, if you don't mind, we can go to the next slides. Yep. So our next speaker is actually Richard Lee, Senior Solution Architect from AWS. So his topic is From Cloud to Crypto, AWS AI drives digital payment innovations. And Richard will actually demonstrate how AWS empowers PayFi innovation through security, cloud infrastructure, and AI solutions. Please welcome Richard Lee.
Hello, hello. Can you hear me? Yeah, okay. Thank you, everyone. Yeah, good afternoon. Welcome to this session. My name is Richard Lee, and I'm a senior solution architect at AWS. And today we will share with us about the AI use cases that happen in the real world. Yes, and we are witnessing a perfect storm of innovation, cloud computing, and artificial intelligence and cryptocurrency payments in converging to create entirely new possibilities in financial services. Today, I will share with us about the real-world examples, practical insights, and show you exactly how to leading company to capitalizing on this transformation. Yeah, sorry. Here is today's agenda. We will, here's the roadmap of for the next 20 minutes. I will cover 3 critical areas. First, we will talk about the fundamental shifts happened right now and why traditional payments companies are scrapping to adapt. And the next 10 minutes, we will dive into some real customer stories, companies like Convera and Trustly and Fraud.net, how they can already implement AI in the real world. Yeah. And finally, we will introduce how the AWS AI with their generative AI platform. I will show you the technology stacks that are making all the possibilities into production. Yeah. Okay. Firstly, let's get started with why crypto payments are fundamentally different with the traditional payment industry. Traditional payment it's quite slow and expensive. You can see that it takes about 3 or 5 days to 5 days settlement times when you do the cross-border transaction, and it will cost you 1 to 4% fees because there are many intermediaries to taking the card. Yeah, and in crypto payment, it's operated 24/7, and it can reduce the transaction fees. As we know that as the transformation is confirmed on the chain and it's finalized, it's no chance to do the chargeback. Yeah. So that's why AI is critically very important in crypto payment. They can't afford to wait for their transaction review and manually, so they must need their AI systems to make decision in split seconds. Yeah. Then we can take attention to this interesting reports from Gartner. There's 74% of the payment industry CEOs said that they will adopt their AI technology, but not in the recent years, but right now. And McKinsey also said that there is 4.4 trillion market size. And there's another thing that's interesting. McKinsey also found that while nearly everyone is investing in AI, only 1% of the companies call themselves mature in deployment. That means 99% of the companies are still figuring it out. Yes. Oh, sorry. Yeah. This is another survey report from the Statica. Yeah. You can see that it breaks down to the different technologies that are adopted by the payment companies. For example, the instance real-time fast payments, or the crypto, or the AI. Yeah. And you can see the AI part. It's around 45% right now, and in only 20% of the companies adopt cryptocurrency. So the message is clear. The AI adoption in payments isn't just about following trends. It's about building companies' advantages. Organizations implementing AI in crypto payments today are positioning themselves ahead of the curve. Yeah. So let's recap about the traditional AI. Before the Gen AI have emerged in recent years, payment companies also use the traditional AI in their four scenarios. For example, their employee productivity and the user experience and operation and performance management and the fraud and the payment intelligence. For example, the use of the chatbot to help answer customer questions and requests quickly, but they are used traditional technologies, something like a vector database. They just call their similar answers back, and then we'll use the rule-based QA flow to do to improve their answer, to improve their customer service. In the merchant onboarding process, they use their OCR or NLP technology to extract key information from the regulatory filings or corporate actions. Our payments customers spent time in last 2 years and exploring their use cases and the POC in latest two years. They are having put some POCs into production and scaling their Gen AI applications at enterprise level. Customers are looking to optimize their POC for accuracy and latency and accuracy, latency, and performance. They also want confirmation that they are pursuing the right use case and adopting the right design patterns, picking the right tools to the job that have never been more important. That's some logos. For example, the Remitly, the Convera, and the Discover, and Capital One, and Mastercard Paytm. They are not only experimenting AI. They are already put their AI to the production. For example, the Convera is implementing AI-powered customer service, and the Discover is doing deploy AI platform to shorten the time to market. Yeah. So let's transition to the heart of our discussion, how AI is actually used in payments today. Let's take a look into a few examples that how AI is used in payments today, and let's take a look. Firstly, we can start with the employee productivity and user experience. Yeah, let's share a compelling real-world example. StraX is a Singapore-based fintech that they provided traditional finance with DeFi through their XUSD and XGD and XIDR stablecoin payment services. And they use their, on AWS, they leverage their AWS infrastructure with their EC2, RDS, and S3, and ECS. And the key service of SageMaker, and they will create a secure and scalable platform to support their payment in 24/7 hours, 24/7. Yeah. So the key point is with AWS they can implement the enterprise-grade infrastructure as traditional payments, and with SageMaker they can do the inferencing with auto scaling and almost zero downtime. Then another case is the operations, focus on the operations and performance management. Convera is a global leader in commercial payments, processing billions in cross. Sorry. Oh, yeah. Okay. Thank you. Convera is a global leader in commercial payments, processing billions in cross-border transactions across almost 200 countries and territories over 140 currencies. They have a real problem and 哦，好的，这样，好的。Oh, sorry. Okay. They have a real problem. They manage 130 shared mailbox as a manual workaround of lacking workflow systems. They will manually review all the shared mailbox and create their customer cases manually. It's really slow, and as they serve to their business users, the customers also need low latency, quickly response for their customer services. So they leverage with their AWS partner, Rackspace. We implement a solution with their SES to route the emails, and with their Lambda and step function to design the workflow, and with their Bedrock to as the email classification, and SageMaker with SageMaker Interpoint with their own fine-tuned model to do their PII reduction. Yeah. After that, the result is so dramatic. Over 95% of the reduction in the share mail from the 130 to just 5, and 82 accuracy in automated cases and creation, significantly improved response time. They eliminated manual email processing entirely. In crypto payment, it's also can be adopted in their customer service process. Now, let's talk about fraud. This is another survey report from Statica. Yeah. From the chart, you can see in the 2025 quarterly, it has different different fraud with the payment with different methods for cash and debit card and crypto. Yeah, it's totally reached about 1.6 billion in a quarter. It's really a sobering number, yes. And the crypto, it's also growing, yeah. So for crypto platform, the data and the core, we're investing in AI-powered fraud detection from the beginning. It's very crucial. The irreversible nature of blockchain transactions means the prevention is the only viable strategy. Here's another case. The fraud.net is another company. They use their crowdsourced fraud prevention platforms, protecting more than 2% of all US e-commerce. They graded and analyze massive amount of fraud data from thousands of merchants in real time. With AWS machine learning services, they can now easily launch and training new models to target emerging fraud patterns. As their CTO explains, Amazon machine learning help us reduce complexity and make use of the emerging fraud patterns. We can see correlations we wouldn't have been able to see otherwise. This is particularly relevant for crypto payments because it demonstrates AI operating at the speed and scale requires the real-time fraud detection in crypto. Where transactions is irreversible, the kind of predictive capacity isn't just valuable, it's essential for platform viabilities. Yeah. Finally, we will talk about another case in the payment intelligence. Trustly is a company that they are open banking payments, headquartered in Sweden and operating across EMEA. As Trustly grows rapidly, their data grows so fast, and they cannot build data analysis solutions, cannot handle the company's increasing volume data. They needed to modernize their data analytic capabilities to become more data-driven and support fast decision-making. So working with AWS, Trustly migrated their data analysis platform to Redshift in 6 months and integrate with QuickSight. They can QuickSight and also with Amazon Q, they can self-build their data virtualization easily with their natural language querying. This is a short demo for the QuickSight. You can just upload your CSV file or all kinds of other files and talk with the Q developer with their natural language. You can get their practical metrics or metrics in the QuickSight. Also, it's reusable and extensible. We see some other payment companies also take it as a value-add service to the merchant. Yeah. Thank you for your attention. We've covered fundamental shifts in crypto payments, see the real examples in AI transformation, and explored the technology making it possible. Now, let's see how AWS help customers to make this happen. The comprehensive view shows all the pieces fit together. AI at the foundation, we have infrastructure with Surgical AI and specialized compute like Trinium and Infrasia, also with the latest NVIDIA GPU instances. And in the middle is the bedrock part. The bedrock part is quite crucial. You can select the Nova, Amazon Nova, or Anthropic Claude, or other important third-party models. With Bedrock, we can also build, do the customization with our data with some models, for example, the Nova. And to build the responsibility AI, we can also leverage the guardrail to build the barriers. Another thing that I want to highlight is the agent core. It's released recently, and you can leverage the agent core components to integrate with sophisticated AI agent, for example, MCP servers, and you can use this service to build complex AI jobs. For example, the agentic payments, agentic commerce. At the top, application like Hero and Amazon Q, and you can develop in spec mode, help your developer teams to build sophisticated project quickly. AWS provides comprehensive support across the entire AI ML lifecycle: design, develop, and deploy and operate. The Generative AI Innovation Center provides strategic guidance, prototyping, and cloud engineering bridge concept to implementation. Professional services provide end-to-end support. The partner network provides specialized expertise for crypto payment platforms dealing with both card-aging AI and demanding financial services requirements. This comprehensive support and the models means you can move faster with great confidence. Okay, so as we conclude, we will leave you some resources to continue learning. There's GenAI in payments today and tomorrow. You can dive deep into the use cases we've discussed, and another QR code you can take a picture or scan. We can connect with our specialist with our team. Our team with dedicated support the Web3 industry, include the CEX, the quad company, and payment. Yeah. Thank you. And our team will look forward to continue the conversation about how AI can, yeah. Thank you.
Thank you, Richard. Yep. So thank you for the inspiration thoughts. And currently, as AI meets crypto, I believe there's a lot we can do in the future. So our third keynote will bring us to the world of RWA infrastructure. The next speaker is Li Kaiyang, the co-founder and the CEO of DMZ Finance. And his topic is a powerful RWA infrastructure to enabling adaptation in minor collateral and debt. Welcome, Li Kaiyang.
Hi everyone, I'm Kaiyang. I'm the CEO for DMZ Finance. We are a powerful RWA infra company. We focus on two things. If you look at it, we focus on the QCDT, which is the first tokenized money market funds to be launched and approved in Dubai's DIFC just last month. And of course, the other thing that we are focusing on is RWA Alpha. That's a lending collateral platform for RWA tokens. Later on, I'll elaborate a bit more on both, especially with our operation in the Middle East. If you look at our company name, DMZ, may ring a bell. It's because we literally name ourselves after the demilitarized zone. Our concept, our vision was for a secure place and authoritative place as well as a compliant place between two worlds, right? Two very distinct worlds, traditional finance, TreeFi, as well as the DeFi world. But of course, if you look at it, today, if you look at the crypto world, we are starting to see two regions emerge, right? First is the big continent of US, where we are starting to see regulation, very, very proactive, progressive, as well as a very good capital base. And of course, in this part of the world, we are starting to see a corridor emerging, right? If you look at Asia, the hub here from Singapore to Hong Kong, as well as Middle East, the likes of the Dubai, Abu Dhabi, as well as Doha, that's starting to form a corridor where very, very good regulators, technology, as well as capital is converging. Talking about the Middle East, we'll talk about our partners. Qatar National Bank, they are the largest bank in Middle East as well as Africa. So in that part of the world, they're the biggest. Very, very high credit rating as well as very, very strong balance sheet. Most importantly, they are owned by the state of Qatar. So strong nation backing. And as with all involvement, if you were to operate in Middle East, as well as, of course, if you want to work with a financial institution, it's not something that happens overnight. It takes a long journey. In our case, it took almost 2 years for us. Early last year, for example, when we first started the collaboration, we and QNB, we first approached the Qatar's regulators to talk about this project that we're working on. And then, of course, very important, in July, DMZ was selected into the QFC, Qatar Financial Center's Digital Asset Lab. So that's a very important milestone for us to qualify. And then, of course, earlier this year, we actually selected to launch our products in Dubai. And that's where we actually went to Dubai's DFSA for consultation. And finally, we got the approval in July. And the products or the fund was launched last month. So talking about the QFC, Qatar Financial Center's Digital Asset Lab, we were very lucky to be selected for their first batch of 24 participants, of course, together with a couple of the other names you see there. On the back of that, what's even more important is that we actually qualify to apply for the tokenized service provider license. This license is very comprehensive for RWA, in that it allows you to do the full range of activities, as you can see there: validation, token generation, custody, transfer, as well as a token exchange. Yeah, this is very, very comprehensive, one of its kind in the region. So this is something that is very, very important going forward. Talking a bit more on the fund that we've just launched in Dubai. This is the Dubai's DIFC's first tokenized money market fund. Key partners that we have will be Qatar National Bank, working as the investment manager, and then we have Standard Chartered Bank working as the custodian bank. So we have two major banks working with us in this project itself. But this fund is actually the first of many to come. It's a series of funds. The first fund, of course, is the tokenized money market fund. But thereafter, we are looking at other RWA tokens coming up. For example, gold. For example, AI. Yep. And new energy. A bit on the tokenized money market funds landscape at the moment. Today, or in going forward, you will see that the tokenized money market fund will be dominated by what we call the BBQ. Simple to remember. The first B is Benji. They are the first tokenized money market fund to be launched in 2021 by Franklin Templeton. And they are also the first one to be accepted in the OKX, one of the major CEX. And of course, the other B will be Builder. They are launched by Barrocks. Currently, they are the biggest at about 2 billion in size. And they are also been accepted into Binance. And of course, Q will be our QCDT that's launched in DAFC just last month. We are the first to be accepted into Bybit. So within just a week of our launch, Bybit has announced that QCDT will be their first accepted tokenized money market fund to be used as collateral on their platform. And of course, we are also working with other CEX. For example, DMZ was actually selected by Binance, BNB Chain, as their most valuable builder program, the latest round in July. So we're working hard to go into the other exchanges as well. And of course, we're also collaborating with OSL in discussion. Yeah. The next big thing that's preview is that on the RWA Alpha. Today, if you look at it, in the on-chain space, there is no top-tier banks that's involved in top-tier lending collateral of all RWA tokens. So we are going to build the RWA Alpha together with the backing of the banks, and then that will allow any investors, especially the institutional investors, to come to the platform with the RWA tokens for collateral and lending. Thank you, everyone.
Thanks, Kai-Ian, for sharing us to show that how RWA infrastructure is finding new strengths between TradFi and DeFi. So let's move to the next part. So at this point, we have a special session that will explore the outlook for the Finternet in 2025. We're honored to invite Jack Tan, Head of Marketing at OSL, to announce OSL vision of what lies ahead. Welcome, Jack, to the stage.
All right, ladies and gentlemen, and welcome to today for our event, an OSL initiated event. My name is Jack, the CMO of OSL. Thank you. Thank you. And it's a great honor to have everybody today. And this is an overwhelming week. You know, Token 2049, everybody's so busy. And we appreciate your time to be here in this section with us. And thank you very much for coming. All right, and today I'm going to talk about Finternet, a very special section to talk about Finternet 2025, which is it's a summit that we actually put together. It's for the very first time that OSL is going to put together a summit in Hong Kong. And this year, during FinTech Week. And this year, FinTech Week is 10 years in Hong Kong. So, and OSL will have a summit of 1,000 people. Why Finternet? Because it's a FinTech and Internet together. That's why we actually name it the Finternet, and it's called the Asia Digital Finance Summit. So, for Finternet, we have Tyson, who is our special media partner, as well as you have Invest Hong Kong. And I don't represent Invest Hong Kong, but do come to Hong Kong for FinTech Week, and I don't represent the Tourism Board of Hong Kong too as well. But please come, all right? And so it's an event that has 1,000 attendees worldwide, and we have also 50 institutions coming. It's an insightful presentation. So a lot of things happening. It's a one full day event. So there will be regulators from different countries who will fly in. And there will also be, we'll talk about regulations. We'll talk about the tokenized horizon, as well as we're going to talk about the PayFi ecosystem and the trend that's happening, including DAT and RWA. And who is coming? So government official, so the financial leaders, crypto specialists like yourself, and all the institutions, including JP Morgan and BlackRock, and they all come together for the first time, that we all bring together like TradFi, and we bridges, OSL will bridge these TradFi with Web3 together to discuss all the different issues and the trends that's happening. And that will be a little snapshot of what's happening on that day. And these are some of the top voices that we have invited, and inviting right now. And so that's why we hope you have to come, all right? And we have also top media, including all these media like the blog, all right, and all the biggest media, in the industry to come to cover us and to support us. So yes, we do have sponsorship as well. Should you want to actually join us, to be part of the partners, to stand beside the regulators and us in Hong Kong, please feel free to contact us after this. And we'd love to talk to you on partnership. All right, so I believe that's the last page. If it's not moving, okay. Thank you very much, and enjoy the rest of the Talking 24/9. Thank you.
Thank you. Thank you so much. A big thanks to our keynote speaker and Jack for sharing your insight. So let's move to the next part. So we're now moving into our panel discussion. Please sit up for the chairs. With these inspiring keynotes and our special session, we have explored the vision of PayFi and the role of cloud and AI in payments and the promise of RWA infrastructure. So this part, our next topic is global pathway for regulated payment and cross-border settlement. This panel will explore how to balance compliance, regulatory framework, and efficiency in the global payment ecosystem. Please welcome 4 speakers to the stage. They are Orlando Marine, Holger Tianwei Liu, Lucas. Please welcome.
Hello. Okay, cool. So if someone over there would like also to join us, we will start in a bit. Hello everyone, and welcome to Payments at the Core, Global Pathways for Regulated Payments and Cross-Border Settlement. I'm Orlando Merone, General Manager of OSL Pay in Italy. At OSL, we see compliance as one of the main foundations for the global adoption. And I'm excited to moderate today this panel, this conversation with 3 outstanding leaders of our industry. Let me briefly introduce you. Holger Arians, co-CEO of Banxa, a global payment infrastructure providing and bridging fiat and digital assets. Tianwei Liu, co-founder and CEO of StraightX, regulated stablecoin issuer with a global outlook on digital payments. And Lucas Young, the head of sales and solution of Kobo, a pioneer in institutional custody and wallet infrastructure. Thank you all for being here, and great to see you again. Let's dive in. So I would like to start talking about compliance and stablecoin. Of course, it could be really useful to have your perspective, of course, introducing first yourself better than me again. And so stablecoins are often pitched as practical bridge for cross-border payments. Adoption is growing, but compliance remains pivotal. And regulation can feel both enabling, but also constraining at times. My question for all of you guys is, how are stablecoin being used in cross-border payments today, and what are the main compliance hurdles? Do you see regulation more as an enabler or as a constraint? Holger, I would like to start with you, given your vantage point on
Thank you, Orlando. Thanks. So yeah, look, we are Banksa. We are traditionally a fiat on and off ramp, which means we bring users into the ecosystem, we onboard them, process their fiat currency, convert it to cryptocurrency. Over time, what people in terms of cryptocurrency have purchased has shifted very much to stablecoins, because stablecoins are stable. You can convert your fiat into those stablecoins and just park them there until you need them. Once they're in the digital asset ecosystem, you can do all these amazing things with stablecoins that you cannot do with fiat. So we have seen a trend towards those stablecoins for consumers, and that has been our traditional business, B2C. But in a B2B world where we're working with many corporates around the world, we're seeing many more use cases for cross-border payments, remittance. We're starting to see payroll use cases, the creator economy. So this is sort of the use cases we're seeing. We see many large international companies moving money around globally, including ourselves in stable coins for our treasury, for our global money movement, because of all the great characteristics that stablecoins have over fiat currency. I would say the biggest challenge still is regulation, but also the banking system. In terms of regulation, it's a very fragmented licensing approach, because when we talk cross-border, you have money transmitter licenses in the US. In Europe, you have MiCA plus EMI. And depending on the country where you want to on or off board, it's just very fragmented. So your approach would be to stitch together different platforms to get your cross-border payment done. And that's what we're trying to change with our partnership with OSL, where we built this one global network with local onboarding.
Great, thank you very much. Coming to Tianwei, from your perspective as a regulated issuer, how does this play out?
Sure, first, thank you for having me here, and thanks to AWS for hosting us as well. Like what Orlando mentioned, we are a regulated stablecoin issuer by MAS as of last year out of Singapore, the issuer of the Sing dollar-backed stablecoin, XSGD, which very fortunately just been listed on Coinbase yesterday. And then also XUSD, the one-to-one backed US dollar stablecoin that is now on Binance and Bybit as well. But if you look at it, actually, I was sharing just the other day that we actually have a long history of being a major payment institution in Singapore for over the last 9 years itself, serving a lot of exchanges and also a major acquirer offline for PayNow in Singapore, GrabPay, and Curious in Indonesia as well. So that is actually a bread and butter of our business itself from a cross-border perspective. Maybe the first way that I've been trying to answer this is on the adoption side is fundamentally actually some of our colleagues and friends at AWS touch on that is the technology improvement of using stablecoin versus traditional payments itself is fundamentally stablecoin payment is both a communication and also a settlement itself. We've been doing the acquiring business for the last 9 to 10 years, right? And you'll realize that when you guys are paying with your credit card or you pay with your QR code, whatever e-wallet itself, when you go overseas and you scan and pay, that communication is instant. You get your EDC confirmation, you get your coffee, you're very happy. But the settlement with the merchants is usually via SWIFT, and that takes 3 to 7 days to settle, and subjected to banking holidays and public holidays, right? So when that happens, it creates two problems, right? Liquidity problem and FX finality issue, right? So fundamentally, you see the shift. It wasn't designed for a cross-border, internet world that we all live in, where everything is expected to be instant and 24/7. And stablecoin or blockchain-based technology solve that, right? A stablecoin transfer result in the instant confirmation and also an instant settlement itself, which is what fundamentally have happened right now with what some of the announcements you guys are seeing. Since last year, Alipay can scan and pay at all the Grab merchants in Singapore using XSGD behind the scene, where the users actually don't know. And more recently with OKX Pay, they are also doing the same thing right now with Grab merchants itself. So that is the tech side that brings out the kind of adoption that we are seeing. But on the regulation side, you just touched on itself, is that I think we are very fortunate in Singapore where the regulators are very forward-looking. So with that, it gives the regulatory clarity of the type of classification of well-regulated stablecoin like us, how the reserve is going to be protected, how, more importantly to a lot of our CFOs in the audience maybe, that it is a cash and cash equivalent. Just on that note itself will change a lot of accounting problem that you used to deal with if you do not know what is this assets you're holding on your balance sheet.
But just out of curiosity, in your opinion, the super app environment that you have in Asia will accelerate the growth of the adoption of stablecoin?
I think first the market is huge, right? I think most of the estimates that you see out for any analysis from JP Morgan to Citi is telling you that even today, it's $250 billion market cap, 99.7 of it is in US dollars. It's expected to grow to at least 2 trillion over the next 5 years itself. So there will be a lot of room for a lot of different players itself. And then if you believe in what we also believe is that the world should not be a single currency one. Every country will want to have their own jurisdiction and economical policy. There will be regulated stablecoin out of each jurisdiction, like one we see from Sing Dollar's perspective, right? And I'm also a Singaporean, right? So Sing Dollar is something that I use on a daily basis. I'm also exposed to US side, so I have been investing in US, but if you see how the currency have been depreciating, like US dollars treasury yield is like 4.2%, but US dollars against Sing dollars since the start of years have depreciated by 6.5%, right? So if you do the math, it's better to hold Sing dollars, right? So there will be alternative out there that each of this market will have their own use cases.
Thank you. And Lucas, from your perspective as a custodian and of course from the infrastructure side, what do institutions need to make this work safely at scale?
Yeah, so from Cobo's perspective, so first of all, Cobo, we are a we provide both licensed custodian service in Hong Kong and Singapore, and at the same time, we also provide non-custodial MPC technology service. So basically, we can be the infrastructure for traditional PSPs and Web3 companies to build their payment rail. So actually, if you rewind back to like 2 years ago, right? So majority of our business coming from Web3, completely. And 2 years ago, more and more traditional payment companies, traditional merchants, coming into Web3 to say, hey, I want to use stablecoin to process the payment. So the first thing they ask is that, where exactly is my money, right? So it runs on blockchain, then you can say you're a custodian, what you are really custodizing. So that is a fundamental, I think there are a lot of fundamental differences between traditional payment and the crypto transactions in a sense, right? There are private key management, there are KYT, on-chain compliance you need to take care of. So all those are something new to the traditional players and something they need to pick up when they are joining this crypto stablecoin payment ecosystem. So solution providers like us and I think everybody in the panel, so we're trying to address this issue in different perspectives, right? So Cobo, we are more emphasized on security and easiness of access. So to me, security is not only about take care of your private key with a license, because to many companies, it's not only a capability issue, it's more about accountability, right? So if you tell a person or a department or traditional finance company, say, hey, take care of this private key, if you lose it, there's no chargeback, right? So that is a typical challenge for a lot of traditional companies to adopt. So that's why they need a custody service or at least a non-custodial MPC service. So we're trying to address from that perspective, and also we're trying to make chain, gas fee, those concepts as agnostic as much as we can to lower down the bell curve, the learning curve for them to enter the industry.
Thank you.
Yeah.
Thank you, and thank you, everyone. So let's move from compliance to collaboration. Banks bring trust, risk management, and regulatory access. Fintechs, on the other side, bring speed and product innovation. The big question is how these trends come together globally. Which collaboration models between banks and fintechs are emerging, and what barriers will exist? Tianwei, let me start with you on the global collaboration model you are seeing.
So fundamentally, even though we've been doing so-called fintech for the last 10 years itself, I don't think any one of us will say that we can leave without the banks. The banks, in my opinion, are here to stay. They have been here for millennia. They probably will still be here in the next 10 years, 20 years, right? They are trust anchor that a lot of us actually, what I call trust anchor, whereby you believe in and you trust it, right? A lot of this sophisticated stuff that we talk about, blockchain, private key, tokenization, my mom don't understand this. I think you need to have a trust anchor that you know you can trust, and you delegate a lot of that. So that's what banks has been doing for the last 10, 20 years, right? So as fintech, we definitely need to work with banks. And of course, there has been challenges, but we also must understand from their point of view, they have a lot of responsibility, and their side of view is always make sure they are more on the conservative side. And they are larger, they also have more issues to be able to handle in terms of other consideration that we as fintech, on the other hand, are able to have a lower cost, a lot more nimble, and can be a lot more aggressive in trying to achieving our game here, right? So this kind of collaboration is absolutely needed, and we can be seeing that at least in Singapore itself, it has hit in the right direction with regulators both pushing, and actually from a private perspective, it has been initiated from that end. So some of the last 3 years, the stablecoin partnership that we have with under MES regime of Project Orchid, you see us working with major banks like DBS, Standard Chartered, to come together to provide solution that's truly scalable globally. And I think that's where every fintech will want to continue working with the banks to basically leverage on some of their customer base, their reputation, and making sure that if you work with a tier 1 bank like Standard Chartered or DBS, it will work globally as well.
Thank you. Thank you. And Holger, in over 10 years of story of Banksa, I'm sure that you have a lot of story to tell us. But what has worked and what still blocks the progress when Banksa has partnered with banks and payment rails and crypto payment rails?
Yeah, just to continue a little bit on the banking partnership and the trust that I believe the industry needs. We need to create that trust with the banks. They need to trust us and have this innovative partner that goes with them along the way. Yep. I think that's important to create the trust for the industry as well. And I've fought for this for the last 10 years in Australia. I would say the situation hasn't changed a lot. And we're a global business, so we have licenses in many different countries. We still experience that hesitance from those banks to really open up and work with us, although we can do so many more great things together. Even on the fraud prevention side, if we talk more with each other, communicate about different scams and all that sort of stuff, I believe we have many more opportunities to fight this, work together, develop innovative, trusted solutions. So that is a progress, it's a daily grind, but we've seen, especially in the US, this loosening up a little bit with the new administration. So there is progress that we see overall, but it takes a long time. So on the other ecosystem collaborations, we work very closely with payment service providers. They're in the business of moving money around globally, and that is costly, it's slow, it's not transparent, we don't know where our money is. And you mentioned that merchants are waiting sometimes for 6-7 days for their settlements. And it's the same with us. When we sell crypto to someone in the US on a Friday, we don't see that money until Monday or Tuesday, or if it's a public holiday, we have to bridge that gap, have a lot of liquidity ourselves. Now we're working with those large payment service providers like the WorldPays and the Checkouts about merchant settlements on stablecoins, through stablecoins. So I think that is a really good use case where we can instantly settle those values to the merchants. And they might be big or small, but it will help everyone. And again, it's transparency. We've had to chase money so many times. It got stuck somewhere here or there. So I think that's where a lot more can be done. But it's already a massive improvement to where we have been previously.
Thank you. Thank you. And Lucas, as a custodian, how the technology can support, can help to bridge these two worlds?
Yeah, I think custodian, first of all, I think the fundamental issue we are trying to solve, or we are solving, is definitely security of the key shares, security of your digital assets in a sense, right? So when they connect with traditional finance, I think for custodian, we are not only able to help on the treasury management, and also the use case on top of that, because all the transactions need to be signed based on the private key. And through that, we can build more and more use cases to make the access easier. So for example, I think just now everybody talk about cross-border payment. So I think the trend we have seen is that it grow from a B2B cross-border, let's say large amount settlement from country A to country B, to a crypto pay-in, like retail crypto pay-in, to a fiat settlement. So as a custodian, we have both sides. We have like a PSP joining as our client. We have exchange market makers who are the liquidity providers in that sense. And also we are also connecting the OTC network. So providers like banks are to provide on-ramp and off-ramp capability globally in different regions. So I think custodian is not only providing a security and also providing an ecosystem to make sure that everybody can transact smoothly and securely within the ecosystem. Yeah.
Thank you. Thank you very much. Super interesting. So now let's move to the emerging tools part that I would like to discuss with you. So beyond stable coins, new instruments are gaining traction globally. CBDC, tokenized deposits, and programmable wallets. Each could reshape cross-border settlements in different ways. A question for all of you. Which of these instruments could most reshape cross-border settlements in the near future, and why? Lucas, from Cobos focus on institutional custody, I would like to start with you.
Yeah. I think there are operational innovations and also fundamental technology innovations we have already witnessing. From operational perspective, it's like, for example, traditional typical crypto transaction serves more like a top-up purpose, right? I can transact you whatever amount of money, but this is not how order works. This is not how e-commerce works. So operationally, I think payment SDK or such payment solution is able to address the challenge of how do I settle an order instead of settle a top-up from users. That's operational innovation. And at the same time, by using smart contract and programmable wallet, we are trying to address some interesting use cases, for example, subscription payment, right? For example, service like Netflix, Spotify is a monthly recurring kind of payment, right? Smart contract, technically everybody aware, oh, okay, I can use smart contract to address that. But how do you solve the trust issue, right? What kind of authorization the user should give, right? Will it take all of my money? So those are all the questions asked by end users and also the service providers. So we're trying to find a way to solve that at the moment. At the same time, if you talk about smart contract itself, stablecoin issuance itself is actually a tokenization process. So in Singapore, we already have 3x, right? SGD here. And in the same region, Hong Kong just passed the stablecoin ordinance. Couple of months ago, we have been helping several potential applicants to write their proposal to HKMA, specifically talking about, first of all, how the private key going to be securely managed, and second is how the token circulation and everything going to be securely managed. So those are the things I think where smart contract play an important role in the entire ecosystem. And last but not least, I want to talk about the chain innovations as well, because people are talking about, oh, I need to pay gas fee. That is a different token from stablecoin. There are too many different type of blockchains. How can I make it cheaper, faster, and easier, right? So we have witnessing some of our close partners like Plasma, Stable, and also Circle, right, trying to address this issue as well. So this is something impressive, and I think it can bring true benefit in the next couple of years.
Thank you. Thank you very much. And Holger, CDBC, tokenized deposit will have also an impact on global payments?
Absolutely. I think we are just on this brink of mainstream adoption, and CBDCs, banks, they're all playing a role here. Why? Because users are familiar with these institutions, and we need them for trust and distribution, right? So we will coexist, we will work together to bring this technology to the masses. What has been the problem so far is user experience. It's still too techy with gas fees and all these different chains, and it's evolving very quickly, which is great, but until we can offer a true Web 2 experience so that our mothers can actually deal with this, can send money, remittance from one side to the other side of the world, not knowing that it's crypto, but it's happening instantly and cheap. And no matter if it's $1 or $10 million, it's happening at 3 a.m. on a Sunday morning. Right? These are the great things that we can create, but we need to get this user experience right. And that's why we need to take the complexity out of it. We need to bring the trust in it, and the CBDCs and the banks play a key role.
Thank you. Thank you. And Tianwei, I'm super curious to understand your opinion, because in Europe we have a lot of discussion because about the digital euro, and now that it's been recently announced that 9 big European banks have started a consortium to found their own stable coin. No? And from your perspective, how do you see the balance between CBDC and stablecoin in the future?
Sure. Maybe I'll put it in a different way of thinking, right? I think what Hugo said was making a lot of sense. They will all work together. Before we throw in all the complexity of like what is a CBDC, what is a tokenized bank deposit, what is like regulated stablecoin, there's actually an existing framework that we have been very used to for the last 20 years, right? What is CBDC? CBDC is central bank money. I think this is something that is quite commonly known already. There is a central bank money between central bank settlements. The big banks settle among themselves through the central bank anyway. So that have already existed, right? So that's something that a lot of us don't even think about and interact with, but on a very high level, it's actually happening. So simply that itself is going to be just tokenized, and you're going to have what we call CBDC, or more specifically, wholesale CBDC. The jury is still out there, but it looks like most of them are going that direction, whereby there will not be a CBDC that a lot of us on the street will be using. It will be more likely that it will be just a replication of the central bank money to allow central banks to settle across themselves in a more efficient manner, the way that we just saw, or between large major banks. Then on the other hand of the spectrum is what we've really been used to right now. Before we talk about regulated stablecoin, when we first started, we launched this under the e-money regime. Right, e-money is something that a lot of us use today. GrabPay, Gojek Wallet. It's something that has been around for the last 20 years. It's nothing new here. So in that sense, we're just adding a new fancy word, which is now a regulated stablecoin with a new technology. When XSGD first launched 5 years ago, it was actually under the e-money regime, right? 100% fiat back, fully safeguarded from bankruptcy remote. It sits on the bank. We can't do funny stuff with it. So that is what is actually happening today. Then if you see that two spectrum, then in between that, what is this tokenized bank deposit? It's just private bank money. When you have a balance at DBS, when you have a balance at JP Morgan, for example, it is just a ledger that says how much you have. They're actually doing fractionless lending, right? So we just move that ledger onto a blockchain. We call it tokenized bank deposit. And JP Morgan have JPM coin. So it's not going to change too drastically. Yeah. The fact is that all of them will coexist. There will be some overlap, but the fact is the technology now is much more efficient. You can do this at a Sunday morning at 3 a.m. And there will be a lot of different use cases that they will cross and use in different cases where it's the most suitable. That's how I see it. Yeah.
Thank you. Thank you. And before to leave the stage to the next panel, I would like just to have your opinion from all of you. What will be the norm in the next 12 months? Because always in the crypto industry, we usually do prediction for the next halving, But in this context, what could be the norm if we are going to see it again in 1 year?
Yeah, happy to start. I think from what I'm seeing here at Token this week, it's such a different narrative this year. It's all about stable coins, just like it's all about AI for the last 2 years. But I see amazing projects. I see amazing companies like OSL actually making things work. You guys have been in the industry for a decade. So what I'm seeing is many companies creating really good businesses out of this, making it accessible and really, really innovative. And this industry moves so fast, so in 12 months' time, it's going to transform very, very much of what we're used to today already.
Can we? Sure. I usually don't do well predicting the future, so I don't predict. I try to build the future. That is way I usually can't outright because I'm just doing it. The fact is that what we are seeing here is what the builders are actually all doing right now after having stablecoin of a different currency is stablecoin FX, right? That's why you see Coinbase listing XSGD, you see OKX doing the same thing. Is that the future for a lot of the stable-to-stables is going to be mirroring what FX can be done traditionally, right? Now be on-chain through a centralized exchange, but the next big future for what I see a lot of builders are building on decentralized finance, right? You're going to have a liquidity pool, AMM, that is DEXs, that's allowing stablecoin to stablecoin swap on a smart contract. That itself, from a tech side, is super innovative, and it allows any developers to freely get access to liquidity and FX that in the past is quite difficult to do, right? Because you need to have access to licenses, to API and stuff like that. That will be the first major thing that I think is already happening, and we expect to see a lot of that, real-world product in the next 12 months. I think we are token. You would see a lot of folks also then building on top of that, which is thus RWA, right? SS tokenization, U-bearing. I mentioned earlier on, just think about what I just explained, right? US dollar depreciated against Sing dollar by 6.5% since the start of January. The treasury yield on Sing side is not too bad, 2 to 3%. I will hold Sing dollars. So there will be a lot of new financial products that will be built on top of a different currency stablecoin. I think that will be happening, and it's already happening from what I see.
Thank you.
Yeah.
Lucas.
And I think this is more like a logical forecast rather than prediction. Because our clients, so some of our traditional payment service provider client took them the whole 2025 to figure out what to do, how to do. And I think in the next 12 years, you will see a massive adoption or huge amount of cross-border transactions through stablecoins, especially in those emerging countries, Africa, Latam, from Latam, Africa, Asia to those like exporting economies like China, through Hong Kong, for example, right? For instance, and at the same time, I think if you have that mass adoption, you will see more and more interesting use cases for the retail consumption use cases, and you will see more interesting DeFi protocols that are trying to solve the stablecoin yield kind of demand, and as well, RWA side, you will see more and more, standard financial product tokenization that to boost. To provide a more robust foundation for all stablecoins. Yeah.
Thank you, Lucas. So we can say I'm super thankful to have this conversation with you today. And thank you again also to the public and to OSL and all the supporter of this event.
Thank you. Thank you for having us.
Thank you.
Thank you to all moderator and panelists for such a rich and engaging conversation. So next part is our second panel of the day. We'll dive deeper into how real-world asset meets Web3. And we're honored to invite 4 speakers to share their thoughts about how we break the crucial last mile that connects digital system and the real economy. Please welcome our 4 speakers to the stage. And they are Demos Katos, Richard Liu, Arvin Serenivation, Kate Zhu. Welcome.
Hello, everybody. Demetrius Galkotis. Everybody calls me Demo. I'm with Blockdaemon. I'll be your moderator today. I'm the Chief DeFi and Protocol Officer at Blockdaemon. Been in the crypto landscape since about 2018. Started off working with Pascal at Ledger. Went over to Blockdaemon, left and did a DeFi startup that was backed by DRW and Cumberland, and just got acquired back into the Blockdaemon ecosystem to scale out the DeFi capabilities. So we'll talk today a little bit about RWAs and Web3 and obviously bridging the last mile in finance. So we have a very distinguished panel, so I'm going to let them introduce themselves briefly, and then we'll get into the questions.
Yep. I'm Richard Liu, co-founder of Human Finance. Human Finance is the first PayFi network. We focus on using PayFi to accelerate global payments, and particularly by providing liquidity to different payments players. We already finished about $6.7 billion on-chain transaction, and it's growing very fast this year, especially after the Genius Act passed.
Here.
Hello.
Got it?
Yeah. Hello, everyone. I'm Kit Chu. I'm the co-founder of Free World Global. So in Free World Global, we are trying to build a trusted and robust platform which will provide efficient financial service to everyone in the globe. Thank you.
Hi everyone. I'm Aravind from GSR. I head our global systematic OTC business. GSR are a leading market maker for tokens that are launching on different exchanges. But what I do in particular at GSR is I head our global systematic OTC business, where we provide liquidity in 200 plus tokens and 25 plus fiat currencies. And support all kinds of on-off ramp trades. Yeah, thank you for having me here.
Hi, my name is Bo Bai. I'm the chairman of Alpha Ladder Group. We have 3 financial subsidiaries. One is a $2 billion private equity firm, and second one is Singapore, one of the largest stablecoin payment and conversion business, processing around $1.5 billion per month, and then happy partner with OSL, and lastly, Alpha Ladder Finance, one of the earliest license holder of RWA token exchange in Singapore.
Excellent. Thank you for the introductions. Let's have a little fun. This question is for all of you. We'll try to frame the opportunity here a bit. We hear a lot about RWAs being the bridge between TradFi and Web3. In your own views, what is the most immediate practical use case where RWAs can have an immediate impact today? Go ahead.
I can start. If you think about blockchain, if there's one thing it does really well, that is moving money from one part of the world to the other part of the world in split second at nearly fraction of the cost today. So anything you do, leverage it to help payments across the world do better using blockchain, you're probably going to be land as one of the most successful use cases. That's why we are most passionate about using blockchain providing liquidity to cross-border payments. So we, with our subsidiary ARF, we focus on that domain, and so far we process $6.7 billion transaction, and is continue to see very, very fast growth. More and more companies, payments company approach us to get liquidity support their settlement.
Excellent.
I think private equity makes a lot of sense because in traditional finance, private equity only opens to the professional investor and the wealthiest people. But those private equity projects, sometimes they are very good company. They are not unicorn, they're megacorn. Yeah, they have the best product or the best business model in the world. For example, like the SpaceX and OpenAI and etc. So if we can do the tokenization of the private equity, I think it's very meaningful to the market because there's a real demand for the retail sector. Nowadays, the retail investor, they cannot invest in this private equity, but through the tokenization, they can invest. So I would say it's meaningful to the market in the sense that it provides an equal investment opportunity to everybody. Yeah.
I mean, in my view, there are 2 ways that RWAs are making a big impact. moving away from or existing in traditional finance, and then also moving into crypto or tokenized forms. So one of them is accessibility. So what it does is it now opens the doors for a lot more people to get access to some of these tokens. For example, someone sitting in Asia wanting to access the returns of a fund or a stock or whatever that's been listed in the US, they can now get access to some of these. So it definitely expands the accessibility for a lot of people. And then secondly, the other bigger use case I see is that for anyone sitting idle on stables or where you're posting your stables as collateral in exchanges, where you're not earning any yields on it, I think the tokenized funds in particular and the tokenized RWAs in general are definitely a much more relevant use case where I see that moving.
I see the RWA tokenization coming from two angles of our subsidiaries. From our private equity subsidiary, we manage around $2.5 billion assets of a technology company as well as infrastructure assets. Tokenizing that to create liquidity and alternative funding sources to support them, to democratize that to open to broader markets instead of just a very professional one, is one angle that we started to pursue from 6 years ago. However, I have to say that journey is much, much slower than expected. On the other hand, coming with our stablecoin cross-border payments, where there's much stronger need for more efficient treasury management. So this has been where we have been focusing on over the past 2 years as our stablecoin payment business gets bigger and bigger, and the need for our clients to have a more prompt, more efficient treasury management is becoming bigger and bigger. And for that, I think the tokenized money market fund, like we purchased from Circle, from Buildo, the tokenized debenture, tokenized debt, and all those more liquid and then yield-generating assets are much more preferred for our payment clients. So we really see this RWA tokenization as technology and compliance. A lot of things we can talk about, but at the end of the day, if there's insufficient liquidity demand, it's useless. Coming from two angles, and the faster one is coming more from the tokenized, more liquid assets.
Excellent. Those are 4 good key kind of use cases, which is great. Richard, this one's for you. Huma published the PayFi stack last year. What are the key innovations for RWA that's taking off for you?
So we published a PayFi stack last year, real outline from across the stack, from the bottom of the transaction layer, currency layer, custodian layer, compliance layer to financing layer. I think you can build innovation across different layers, but I'm really, really interested in more on the top of the layer, more on distribution. You have all the assets coming in, you tokenize it, but when you distribute it through DeFi, you're able to create a bunch of interesting utilities that TradFi is not able to match. There is, for example, one particular piece called looping. So in the DeFi world, once you get this, you get the money, you buy the RWA assets, you get a token, but that token you can still use it collateral to borrow money again and go back to buy again. You repeat this process, meaningfully improve your capital efficiency. So you can easily looping 3 or 4 times. You get much higher efficiency. In TradFi, it's the same thing because they work in certain hours. They also operate in certain manual processes. There is no way for them to match. That efficiency is going to bring substantial advantage over whatever is there. This, together with what this gentleman mentioned about accessibility, I think those are 2 powerful value propositions for RWA.
Excellent, thank you. This next question is for Kit and Dr. Bo, and then obviously anybody else can chime in. Your companies emphasize compliance at core. How do you see regulatory licensing and frameworks enabling or slowing the adoption of tokenized RWAs across jurisdictions?
Okay, probably I'll take the question first. I do not see license as a barrier, but instead we see license is an enabler. Because just like driving, we drive, we need driving license, we need traffic rules, right? So I would say this traffic rule makes sure everybody is safe, and it enhances the efficiency of the system as a whole. So with Free Will Global, we obtain license from different jurisdictions, and we see this as a strategic investment. So I would say it will take some time to set up the regulation, but with the regulation, I think the tokenization of RWA will go faster and further in the future. Yeah.
Yeah, added to that is regulatory clarity is key. When my firm started this journey, we started applying for license in 2018-19 in Singapore because of that incoming clarity. We obtained our first RWA token exchange in 2021. That also later with the CMS, Capital Market Service License, and digital payment token licenses allows us not only deal stablecoins, but also to tokenize securities, debentures, equities, stocks, and then CIS, and then create both tokenization and also custody of a security and the security token. Singapore has the benefit of where the SFA clearly regulates how this works. A token needs to be something in this regulatory regime. It may be a debenture token. It is a stock token. It may be a collective investment scheme token, fund token, or it may be just a digital representation of something else that is not a part of the SFA regulation yet. But that regulatory clarity is critical, where we actually appreciate the ability to be able to do this in Singapore. Because every single step that we rolled out from our first tokenized credit, carbon credit, in 2021, we did a tokenized hash rate, which is essentially a whole bunch of crypto mining facility in 2022. We did a tokenized money market fund in 2024 in Singapore regime, and then every single one of them, you have a clear SFA rule to follow. And then because of our digital payment token license, we're able to pay with stablecoins as well to benefit of that RW token with the efficiency of stablecoin payments. So I think that regulatory efforts is super, super critical. And of course, AML, KYT are absolutely at the core of all this, not only just for stablecoin payments, PayFi, but also later for RWA token as well, which is something that we all spend a lot of time on.
Yeah, excellent. Arvind, this is for you. GSR is at the heart of crypto capital markets. What role does liquidity provision and OTC trading play in making RWAs investable and attractive for institutions?
Yeah, sure. So I think one of the other issues with RWAs today is you can actually go and tokenize a real world asset. So let's take, for example, a money market fund. So it can be tokenized. Now you can look at treasury funds, or you can look at private credit funds, or you can look at all sorts of different funds. Now some of these funds, the moment you tokenized, you're enabling it to be traded on the primary market. But what is missing is you still cannot come in and buy and sell when you want. I mean, one of the biggest advantages of crypto is that you still have the ability to trade on the weekends. Just by tokenizing a fund, you don't get all of those benefits straight away. Because the reason for that is the real issuer, some of these funds might still take T+5 or T+3 or T+4 to actually be settled, to be redeemed and minted. Now, what we do and where we think liquidity provision is very important is to come in and make the availability of some of these tokens to be traded instantly. So even though in the real world, some of these actually take T+5 or T+3 or whatever, if we can come in and make some of those to be traded, both bought and sold instantly on a weekend at any time of the day, 24/7, that then changes the game. Because what that does is, it pretty much makes it seamless for people to convert from cash, which is stables, into any of these tokens. And then that's something that we actively look forward to doing as well. In fact, we've already launched support for 3 of the funds, 1 private credit fund and 2 money market funds, where we've launched in DGFT, where we provide liquidity for those funds to be traded at any point of time in the day. So people can come in and even trade on a weekend, and then there'll be immediate liquidity on whether they want to buy or sell. They don't have to worry about the actual time it takes to redeem some of those funds. I think this is one example, but broadly that's where liquidity provision comes and makes a key role, I guess.
7/24/365, huh? We all ready for that?
Indeed, yeah, that's what we're doing for at least these 3 funds.
Yeah. For all of you, one of the risks for RWA tokenization is fragmentation. Different platforms creating isolated ecosystems, right? Fragmented liquidity, in essence. What needs to be done to ensure standardizations and interoperability so institutions feel comfortable in participating? Any one of you?
I'll start. So the way we see it is, so there are different tokens and different tokenized RWAs, and then each of them serves a different purpose. So for example, I talked about the tokenized money market funds. Then there's also tokenized stocks. You can also look at stable coins or currency-backed stable coins as an example of RWAs. Now, some of them, the reason for them to exist in the crypto world or tokenized form is accessibility. Let's say the tokenized stocks is purely an accessibility question, and then maybe availability to trade on weekends and stuff. But I really don't think there's going to be a lot of liquidity provision that exists on the weekend as well, given all the risks, all the price movements and everything that happens, and then you don't have a real world market to go and hedge. So that makes it really challenging for liquidity providers. So if you look at this accessibility problem for some of this, and then for others, they have their own specific use cases in terms of how you can cluster different RWAs and then start to tackle them. This already brings some sort of a fragmentation into how you look at RWAs in general. But then more specifically, there are also these different funds. Let's say there's a lot of these treasury funds. Now, how do you go and pick and choose which ones to access and what is available in your particular jurisdiction? I think a lot of these are challenges that you need to deal with. But I do think that as things move into more decentralized exchanges or DeFi forms, a lot of this can be handled a bit better, and that's the way I see some of these moving forward as well. And hopefully that does improve some of these challenges on fragmentation.
Anybody else have comments?
Yeah, from our side, we nearly feel is just across the stack, define the boundary between different layers. That's why we published the PayFi stack. Really trying to define potentially the interface between different layers, particularly when you come to the distribution and when you have token that meets with certain characteristics, allow you to have better capability to do composability with different protocols. I think that will play a very, very interesting key. And that, I think I'm looking forward to work with more protocols to define those interfaces, standardized, so that make it much easier. In terms of liquidity fragmentation, I think that's normal. That's expected. Just like today, in stock market, you have all kinds of markets, and I don't really care whether we need to, get them together. Whatever platform that provides the most value, naturally people will go to those platforms.
I think, unfortunately, many of us that started this game in this RWA token liquidity business will be facing a lot of challenges very soon. Liquidity is going to be concentrated into where there is already quite a bit of liquidity. So I anticipate for the big guys, whether it's a Binance when they have their Binance Alpha and then get in the Binance Spot, and then when they are fully ready, and which they are, I assume, doing a lot of efforts, including buying license and buying exchange license all over the places. And then when they are fully ready with their existing liquidity of the spot and their perp, it's going to be very scary. And then when NASDAQ get the SEC approval for their stock token on their liquidity, it's going to be very scary. Unfortunately, on the liquidity competition, it's going to be, for quite some time, it's going to be the big boys game.
Yeah.
I feel very sad to say that because I also have an exchange, but I don't anticipate my exchange to any means to be able to compete against them. And then that will force us to think about where is our role, where is our position, for GSR to be a wonderful, one of the biggest market maker, whether it's NASDAQ, whether it's Binance, or whoever it is, we need them. That's how the liquidity gets created. So whether it's a SEX or whether it's, probably some of the larger DeFi pool, probably End of the day, it's the larger existing liquidity is going to absorb and create those further liquidity for RW token, and then the fragmentation will gradually disappear.
Yeah.
Small guys like some of us will just die out.
Yeah.
I think besides liquidity, I have two more points to add. The first one is I think we need a unified technical standard globally. Just imagine if, for example, like internet, if every country has their own protocol for websites, we wouldn't have a global internet today.
True.
So I would say we need a unified technical standard for this. And the second layer is the compliance and legal. But I think for this point, we still will have a lot of fragmentation because every country has their own law for the asset ownership. They have their own procedure for the KYC. They have their own investor protection. So I would say there still be fragmentation on legal and compliance level. But I think this is okay. Just like going back to the driving license example. If you are a person with the Chinese driving license, you can drive in US. That's okay. So we just need to have a mutual recognition on that. Yeah.
Exactly. Excellent. We just got a few more questions, and I know we're getting close to time, so this one's for all of you. When we talk about bridging the last mile, it's not just about technology, it's really about security. How can tokenized assets prove resilience in areas like credit risk, custody, settlement to earn institutional confidence?
I personally think one critical infrastructure for the RWA domain that we haven't talked enough, that is either you call it insurance or collateral reserve. Okay. So in Web2 world, you have that. In Web3 world, today, we all focus on just putting the asset on chain. That is just a very, very first step. The second step, a lot of innovations I talk about how do you do looping, those type of things, improve capital efficiency. Very soon, many people will start to talk about what if something goes wrong? What if the innovations you guys are doing generating cascading effect of failure? And I think that will be a key thing. Related to the question you talk about, it's reserve. And I'm pleased to share Huma is actively working on Huma PayFi reserve, and we're going to launch within Q4.
Excellent. Anybody else on the security risk?
I think to avoid the credit risk, we need a very strong and clear legal entity for the underlying assets for every RWA project, so that the underlying asset will not be affected even though the issuer go bankrupt. This is very important. And for the main player in the market, for example, the issuer, the custodian, the settlement agency, we need to have a pretty strong license on them so that we can avoid the counterparty risk for this.
I mean, I would say that the other risk that comes in is how do you make sure that there's a proof of reserve for the actual tokenized asset, it is backed by the right amount of the real asset, for example. So I think it's the audits and making sure that the firms that are tokenizing them, they are audited, or the places where these are exchanged, they are audited as well, and make sure that you do have the right sort of backing. I think that's another key aspect. Because we've not seen this, but there's always this risk that today you go in and trade some of these tokenized funds or the tokens, and then what if you don't end up being able to eventually redeem those tokens? What if there's no real validity on those tokens? So I think as the audit needs to be, there needs to be a lot of focus on the audit, and this is where regulations come in as well. All regulated players, hopefully the regulations themselves impose constraints on those players to make sure that they are audited as well, and then some of that is pretty crucial. Yeah.
I just add to that is the difference between the financial assets versus the non-financial assets. For the financial assets, such as existing publicly traded bonds and stocks, and the traditional industry has a pretty fulsome solutions to that, which is a licensed custodian. And then there is a strong rule in every jurisdiction, major jurisdiction. In Singapore, for example, if you want to be the traditional security custodian, you got to do a lot of respective work. And the law, as well as the case law, has been there, well established for the segregation, even in the worst case of a bankruptcy, as part of the ring fencing. So for the public traded and the securities and the financial assets, there's pretty good ways to protect. And then RW token actually works quite well, because in the worst case, if you use, like ERC 3643, some other of the protocols, and then even if you lost a token or being stolen, and then the underlying is in some custodians, and it still allows you to recover the real money. So I think that actually helps. But for the non-financial assets, and then some of those private assets, for example, the private credit, private equity funds, even money market fund, frankly, is managed privately. And then also some of the real world, like the solar project charging station. The process of the RW token itself is very similar to IPO listing process. Do your work, finish up your asset valuation reports, audit report, legal reports with a credible firm, and then file those documents, and then you have your fund admin finish up your quarterly and the monthly fund admin reports. So this is a traditional part of a Web 2 efforts to safeguard the assets is there. There is a clear procedures. And the question is, when we go down the path of RW token, don't forget, you have to safeguard the RWA first, because the tokenization part is very easy. For all of us here, we can tokenize anytime.
Yeah.
We have all our audited smart contracts, do it at any moment. So.
Excellent. All right, this is our last question. I'm going to have you, because you guys are executing and building and you got our heads down, I'm going to have you put your kind of future visionary hat on, because the future's so bright you have to wear shades, right? As we look for the next 3 years out, what does success look like for RWAs and Web3? Give us your thoughts.
Maybe I go first. We are very focused on the cross-border payments, particularly among Asia Pacific, Middle East Africa, and Latin America, the non-US, non-European corridor of where the stablecoin makes absolute sense. Where I see the success of RWA tokenization over the next, hopefully 2 to 3 years, is when all our clients in that whole journey of cross-border payments, any moment we can begin to really enjoy real-time treasury management with the RWA token. Really, real time. And then with enough confidence. So that's something that we've been working and fighting very hard on. And then if some of us jointly can make that a success, and I feel pretty good about it.
Excellent.
No, I mean, just to add, we would love to see that happen as well. And then for us to be providing liquidity on some of those foreign exchange pairs. Today we support 25 plus pairs. We want to see more and more adoption in Southeast Asia and Latin American markets and African markets and everywhere. We're definitely here to support. And then similarly on the funds and stuff as well for the treasury management, we'd love to see that grow too. I mean, we are actively, we've already started providing real-time liquidity 24/7, 365 days. On some of them, and we definitely see that growing to the point where at least for some of those specific assets, the tokenized form makes a lot of sense, and then we can make it easily accessible for people to swap for their treasury needs.
Excellent. Good.
Okay. In 3 to 5 years, I wish I can see more and more people they will use stablecoin, because stablecoin is the basic form of tokenization of RWA. So if there will be more people have a crypto wallet, they try to use stablecoin in their daily life, I would say this is a very successful case. Yeah.
So in cross-border payments, no matter either Singapore, Hong Kong, T+0 is always a dream for many people. And we envision in 5 years, all those things today largely T+3 will transition to T+0. That will become mainstream.
Excellent. Guys, thank you very much. Really appreciate all your thoughts on RWAs and Web3 and the future of them and some of the issues and things that we're really addressing and you guys are building and executing to. So thank you very much.
Thank you.
Thank you very much.
Thank you for being an excellent moderator. Thank you.
All right. A big thanks to speakers' insights clearly demonstrated how RWA and Web3 together can become the bridge to mainstream finance. So let's move to the final part. Our final panel today will explore new generation payment networks and digital asset integration. This panel will discuss the evolving network of payment, the integration of assets, and the role of compliance play. Please welcome our 5 speakers to the stage. And they are Adele Hu, Zhao Chao, Michelle Wang, Christopher, Takio Nakamado. Welcome.
All right. Hello, everyone. Thank you for joining us for this infrastructure panel. We've got a stellar lineup of our panelists today. My name is Adele. I'm the head of DeFi and RWA at Tyco, which is a base rollup, the layer 2 built on Ethereum. At Tyco, we've been working tirelessly to build an infrastructure dedicated for faster and secure infrastructure and settlement, settlement rails, right? So today, I'm very much looking forward to hearing all of our panelists from different payment angles to talk about what infrastructure they're building. So to kick things off, why don't we have a quick round of introduction from each of our panelists? Shall we go from Job?
Yeah. This is Job from iPaylinks. I think maybe I'm the only one from the Web 2 world. Others are from Web 3. So we do the cross-border payment, but it's a traditional cross-border payment. Use the fiat to leverage our products, help our clients to transfer the money from one country to other countries all over the world. That's what we do. But now we see in some emerging markets like Africa, Latin America, and also Southeast Asia, there's a lot of demands that they will receive or pay crypto, especially the stablecoin. So now we are seeking the partners, and we also jump into the Web3 world to see how we can solve this issue and help our clients to both collect and pay the fiat and the crypto, especially the stablecoin. That's what we do, and we started. Yeah.
Okay, so hi everyone. I'm Michelle Wang from Head of Legal of Payment Asia. So we've come a long way from the .com era to now the Web3 advancement. So we have a number of business units. To name a few, we do card issuing, we do online and offline payment solutions. We do we have a trust company called FGA Trust, where we provide not just the traditional trust offerings, but also digital asset treasury. So we do a number of things, and I'm very happy to be a part of this company, to steer the legal strategy of this company, which is redefining the future of finance and bridging Web 2 and Web 3 payments with innovation.
Thank you very much. My name is Christopher Mitschke. I'm with Giesiger & Devrient. You can also say G&D. We are a security tech company. Have a global footprint. We're active in 3 different distinct areas. One area is currency technology, so we print money for certain jurisdictions. We have to provide banknote paper or security paper, as well as banknote processing machines. That's one division. The other one is security digital solutions, which focuses on things around identity, critical infrastructure primarily for Germany, government-related businesses, as well as topics around passports, ID cards, and the likes. The division I'm in focuses on financial platforms. We are one of the largest card manufacturers worldwide. So we provide anything from the credit card, debit cards on a physical as well as on the digital landscape. A little bit of a fun fact. We are the oldest fintech, for sure, in this room. We founded 1852, family-owned and still active.
Hi, thank you for having me. My name is Tokyo. I'm a COO of a project called Slash. We are a project focused on crypto and stablecoin payments in Japan, specifically. Our core product, Slash Card, which is Japan's first fully compliant crypto card. So think of Crypto.com, think of Cast, Reap, and all the other players, but issued in Japan for the Japanese residents, Japanese users. The reason we focus on in Japan is because, notably, crypto penetration is extremely low still in that country, just hovering around 5-6%, well below the global average. And we aim to be the sort of the retail choice of the first choice for interacting with crypto and stablecoins moving forward.
Awesome. Now, I'm very curious about each of your expertise. Would love to understand your personal role as well as your company's role in shaping up all of the Web3 payment infrastructure. So a question for Job here is that at iPayLinks, what do you guys do to solve any inefficiencies, as you can see, in cross-border payments? And do you guys have any Web3 angles that you're working on? And how do you see that evolve?
Yeah, okay. For the traditional payment, I think everyone knows firstly is the high cost. You can see for B2C scenario, every year Visa must raise their cost. I don't know whether they have the rule or policy to reduce the cost, but I only see every year they raise the cost. So this is the first problem we encountered. So our goal is to first reduce the cost and also leverage the Web3. I think we can do so, like we issued cards in USDT or USDC. They don't need it. Maybe in later several years, we don't need Visa or Master to do such kind of traditional model. We can issue the cards directly, use our own network or some technical method. This is the first one. And so second one is in transparency, I think. Let's imagine if we want to transfer money from Africa to China, there's several intermediaries, including the correspondent bank, many PSPs, and also other like the infrastructure participants involved in it. So the transparency is not very well. Even we use the SWIFT, we don't know where the money is now. Now we can see the GPI from the SWIFT to improve such kind of function, but we still we have encountered the customers' money. It blocks for 1 month, over 1 month, but we cannot know who blocked it because many banks, they have the different policies and ML policies and the risk appetite, so we don't know who blocked the money, and we need to try push every bank to check where is the money and how and when the money can arrive or returned. This is a big problem for us. So now we are build some networks. We will try to get the license in different countries, like in Africa, in Latin America, but it's I think it's a very high cost for a company to do so, but there's no way to solve the problem. So I think if we can leverage Web3 infrastructure, so we don't need to do all by ourselves, but we can use the ecosystem like CPN, what they are doing now, the OFI, BFI, we can leverage it to make the payment more efficient, more transparency, and lower cost. Yeah.
That's very interesting. I think blockchain or cryptocurrency, when it started out, it was a real-time gross settlement rail, right? Like, and then I hope that, you know, in the coming years, this will actually become a reality enabled by you guys. So then for Michelle, so on your end, how does Payment Asia solve any inefficiencies or bottleneck or bridge users from Web 2 to Web 3?
Yeah, so we see Payment Asia as helping to bridge users and businesses from Web 2 to Web 3 payments safely. But firstly, we have a large network of merchants onboarded with us, and we can very quickly help enable them all to stablecoin acceptance. And secondly, we have, like compliance-wise, we have had 26 years of experience in knowledge in regulations relating to payments. So we are confident in that we can have Web3 payments transactions done safely and also compliant with laws and regulations. And thirdly, this is the highlight of what we can offer, which is the 2-in-1 wallet card capability. We, subject to jurisdictional laws and regulations, we are able to let users of this card to convert between fiat and digital currencies anytime, anywhere, just by tapping their wallet card on their own phones. And that they can also make payment in fiat and digital currencies as they wish. And we are also actually partnering with G&D on this, and they are helping us issue these cards. So it's bank-grade protection in terms of security. So this can be something that we can all consider. And also, we're also partnering with trusted companies in digital, traditional finance and also digital currencies, so that we can create a smooth, secure connection between the two worlds. And finally, we have treasury support. Through our FGA Trust brand, we offer like users who are transitioning into Web3, they can use our services for treasury support. So all in all, to sum it up, we will use our experience, our merchant base, and leverage our secure tools and partnerships to ensure and give confidence to the public and users and businesses to securely transition from Web 2 to Web 3 payments in different regions and industries.
That's very cool. It sounds like you guys are tackling payments from all kinds of different angles and covering it all. So good luck with that, and I'm sure that I see a bright future at Payment Asia. So then Christopher, so at G&D, well, I love that you mentioned the firm has been established for over 100-something years. So you guys have been securing, I believe, from banknotes to CBDCs and all kinds of payment instruments. So I'm curious, like, what are some of the things, you know, first and foremost, you guys are working on at this moment? And also, like, how do you see, you know, the traditional payment methods, such as all of these, you know, bills and CBDCs and all of that coexist with crypto payment rails?
Okay. Yeah, thanks for that question. Yeah. So you're raising, the coexistency topic is an interesting one, right? So you have, for sure, the traditional banknote, which is, we all know that and we're familiar with it, right? That's now going in digital, the CBDC, as you had mentioned. Then you have the other digital assets that we had talked earlier. If you looked at digital assets as a form of tokenized deposits with the banks, you have the another layer, another type of form of payment, if you wish, and lastly, of course, stablecoins. So each of these represent a different type of approach and layer. So the CBDC, cash, digital cash rather, is a trust anchor on the one hand, and it's a liability that the central bank has or holds in this context, right? If you have tokenized deposits, and that represents more the banking environment, right? So that's the bank or financial institution would hold a liability towards that. And lastly, you have the stable coins as a
probably the most agile forms of payment, digital payment possible, yeah? And whoever issues that stablecoin holds that liability. So how could this work together? So here's an example, right? So if I were to, or Tokyo wants to sell his NFT, right? And he's placing and pricing the NFT at 100 USDC, right? So it's a stable coin, no? Pegged to the US dollar. It's pretty straightforward. I don't have stable coins. I don't have USDC. What do? Well, I want to make a purchase, right? And I'm going to use my tokenized assets, my tokenized deposit, as a form of payment, as a funding source, yeah, to purchase the, to make the bid, yeah, and hopefully you'll sell me the NFT for $100, right? So from the front end, we're all happy, yeah? You get your $100, your 100 USDC, yeah, and I get the NFT. Okay, so what happens then, of course, in the back end, you have all these different stakeholders holding certain liabilities that has to be settled. And this is where then the wholesale CBDC comes in, right? So relatively instantly, you can have the CBDCs, wholesale CBDC, settle between the banks and the different entities involved in the process. Right? So this is how they can exist together, right? But as we learned also earlier in some of the panels, yeah, it's a little bit more complex than that. You have multiple environments, multiple systems. They need to somehow, in order for that to work seamlessly, a lot of things need to fall in play, right? So we can start off with the having interoperable protocols, yeah, in play. We need to have the standards of the tokens and what they actually looks like. We need to have an identity layer. So with all due respect with anonymity, you still need to, from a compliance perspective, know who you're dealing with, yeah. We also need to have, in order for these transactions to swap in real time, yeah, we need to have the respective oracles in place, secure oracles in place, as well as the the technology to basically support that. And lastly, we need the compliance and the regulatory framework to make all this possible, and the rule books for that matter. Yeah. So those are the things I think we'll need to be looking at in more detail later on.
It's a lot of pieces to put together to actually enable that for the foreseeable future. So hopefully, yeah, in the next 3 to 5 years, let's see what happens. Yeah. So then let's move on to Tokyo. So I believe that Slash is a native, more native, like Web3 native payment rail. Like, so I'm wondering what, how you see that. What is the kind of the thing that users would want to use, in Web3 payments? Like, is it faster or cheaper, lower fees kind of thing, or is it more like smoother user experience? And how does Slash, work on to drive like the mass adoption end of the day?
Right. I think the answer depends on sort of the regions you're looking at, but specifically I can answer, I think, from experience in Japan, or maybe countries like Japan that have more of a developed sort of banking system where the digital money, digital dollars, digital yen is prevalent and already available, right? When we think about that type of environment, like specifically in Japan, people don't have much of an incentive to go to stable coins just yet. Or people don't feel, the retail doesn't feel that, There's a lot of big incentives for corporations, global trade companies. But at the retail level, we have PayPay, we have, Visa, MasterCard already. That gives you a lot of points, a lot of hotel points. There's no incentive for us to transfer over to stables just yet. So I think what they need and what they want, or what I personally want, is not necessarily like lower fees or ease of transfer, but for all of that difficulty to be abstracted away, and I just enjoy the benefits of what the institutions get with yield generation, treasury management, and I want those points, or I want those incentives, additional money to trickle down to me as a user. This is purely from a retail perspective. So us, what we're trying to do is we want to be Web3 native, but we're more of a Web 2.5 type of thing, where making crypto more easier, more friendly, more related to the end users who don't have any crypto experience just yet, for them to step into the world first, to learn about where the yield is created, how the yield, actually, scratch that. I want to create an environment, create an application where users can enjoy stablecoin yield without really knowing that they have stable coins in the back end, right? We want to just give them the incentives just as they come and kind of abstract away all of the technical stuff. And I think that's what really drives mass adoption specifically in Japan.
Interesting. I think that you're talking about something that is, I guess, what everyone is almost like seeking in Web3, to have some sort of incentives to, or almost like monetize their actions, but at the same time to have actual utility to, the things that they're using. So yeah, okay. Well then, let's give it a try for some broader questions for everyone. I would love to see what you guys think, because we're talking about stablecoin so much, and what do you guys think that stablecoin still needs to have in order to have this actual day-to-day usage and utility, and as Tokyo, you were saying, this invisible experience for everyone. Whoever is interested in.
Maybe I'll give it a first stab.
Sure.
It's a multifaceted question, right? So there's not a single answer. There's a whole bunch of things that need to take in place. I think personally that regulatory transparency or clarity needs to be, and trust. Now, so we all need to, all participants need to really be able to trust what's happening, what's going on. It starts what you had just mentioned earlier on the retail, on the consumer side. Yeah, they need to trust the environment, right? And then the back end, all the way down to the transactional settlement, we all need to be able to understand what it is. So, and that needs to happen cross-jurisdictional, right? So you have the issue of understanding what is this thing called stablecoin. Do we all have a single definition of what it is? Yeah, who can issue it? Who can receive it? Yeah, what are the reserves behind it? Are they auditable? No, and not just really auditable and transparent. Yeah? So those are some of the aspects that really underline the trust component. Yeah? As one add.
Let me share. From my perspective, there are differences between emerging markets and developed markets. So for emerging markets like Latin America or Africa, people are used to different wallets and payment methods, and they're open to new ideas and new methods of payment. And also, they don't have a very strong payment system there. They usually use closed-loop wallets. So for stablecoin being open loop, they could catch on very fast, just like how China evolved from cash-based transactions to card processing and to digital wallets in a very, very short period of time. So in contrast, for developed markets like Hong Kong, it's tougher for stablecoins to go mainstream because this payment system is so robust, and also the user habits are so deeply ingrained. So for stablecoins to become widely used, government, their policies that encourage the adoption of stablecoin would be crucial. With Payment Asia being a leader in the fintech industry, we are actively liaising with the government and also regulators on our vision and our views on the future of Web3 payments. And but then in the end, no matter if you have the vision or the policy to back up the vision or not, most importantly, you need businesses that can really back the vision and to execute the plan. So with Payment Asia being an experienced service provider, we are ready to make this happen. And we are leveraging our know-how and infrastructure to make this happen. Yeah.
That's a very cool point, Michelle. You mentioned, I think that you're saying in the more unbanked area, the people are generally slightly more adventurous or having slightly higher risk appetite, so they would be willing to even try new things such as stablecoin, whereas Christopher, you mentioned, I think the transparency and trust in even education, right? You need to educate people about, what is a stablecoin, what is it backed by, and what is the trust infrastructure underneath, right? Such as, is it audited? Who is the issuer? After all, these are mostly private money, right? So perhaps to penetrate the more banked area, more developed countries with robust banking systems, this trust and credibility of stablecoin matters much more. So I think that you two covered something very cool, and I would love to hear Tokyo or Job, like, what's your perspective on this?
Okay. Yeah, from my perspective, I think add one more thing is the security. I think the safe, whether it is safe to use the stable coin or use the crypto on the network. I think recently we can see some critical issues from many countries that the crypto is stolen. Maybe it's easy to stolen because it's just the system, not paper money. I can keep the paper money in my wallet. It's very safe. But on system, who knows what kind of technology can stolen your money, stolen your wallet, and there's a lot of hack to do so. So this is very important. And even more and more people, I think, now are eager to use the stablecoin to do the payment because it's very quick, cost efficiency, and many value added. But the security and the safety is very important, I think. So yeah, nowadays more and more technical company focus on this.
Interesting. Like, I think you're saying that the, in Web3, the ethos is to not your keys, not your coin. Basically, custodizing your own assets has its own risks, right? Like, so as the user of a wallet, you have to be educated on like how to safely, keep your wallet and to keep yourself, like, your usage from being hacked and from theft or exploits. That's, I think, in almost like the modern era of how we safekeep our assets, right? And in the past, when you only have paper bills in your pockets, it's a different safety measures that you have to take.
Yes.
Yeah.
In traditional banks, we have a long time to do so. So people are very trust such kind of bank system. But for crypto, we need some time to do such kind of trust.
Makes sense, yeah. What about Tokyo? What do you think?
Yeah, so obviously everything they've said so far, regulatory clarity, I think localization, it's a pretty big area for me, especially when we look at we're the last, we think of ourselves as sort of the last mile, or the tail end, really trying to get new crypto users onboarded. So what we want to do is enable what we can already do on global exchanges like Binance and Bybit, and help bring that experience fully compliant in Japan for us, especially. Like with the Bybit account and Bybit card, you can easily go from your trading account to your normal funding account, and you can also earn money that's in your funding account, while it's also can be used as a spendable amount, through your debit card. That's an amazing experience that you can't do with your normal bank debit card, right? I mean, in places like Japan, where interest rate is very, very low, below 1%, 0 point something percent, even if you put it into your savings account, you're earning 0.5. If it's in your common account, you're basically earning 0 interest. The money's not doing any work for you. Whereas, if we can replace that with a stable coin, it might not be JPYC pegged, but maybe USD pegged stable coin, just by having it in your wallet, you can earn, let's say, 3%, 4% on some of these yield-bearing stable coins. That experience is a clear, significant incentive for people to move over to stable coins. It's just not known, not trusted just yet, but I think going back to sort of the cash incentives I spoke about before, we need a lot of incentive like this, very clear to understand monetary incentive for people to move over to stable coins, especially in the retail space.
Yeah, That is a very cool one additional angle of covering stablecoin adoption, right? Like in addition to the trust, regulatory clarity, security, etc., there also needs to be motivation. Like so incentives for people to move from what they're currently using to like a futuristic or modern way of payment. Well, with that said, now that I also noticed that all of our panelists are from companies that are, you know, either headquartered in Asia or like having significant presence in Asia, we're like, I mean, just throwing this question out here, which region do you see like as the you know, like that will be the leader in payment innovation? Obviously, we're a little biased again, well, toward Asia, but what do you guys think? And then, I mean, because I've realized that regulations are slightly more, you know, well, in the US and EU, for example, the regulations are slightly more clear. And, you know, over the past few years, obviously with MICA, with in the EU, and then with Clarity Act, Genius Act in the US leading the way, all the other, you know, regional jurisdictions are following suit to, you know, adopt more stablecoin, or different governments are thinking to allow private issuance of stablecoins, right? So, but then also payment innovation is not just looking toward regulations. So I would be curious as to what you guys think, which region would actually be the leader in payment innovation?
Maybe I'll give that a stab, right? So the interesting thing is you mentioned different types of innovation, right? So I think a diplomatic answer would be, I think every region has something that they excel in that the other regions may not be so good in at the moment, and vice versa, right? So if you look at Asia, what we see here is, in particular in the last few years, a significant growth and adoption rate, in using mobile payments. The alternative payment methods, the WeChats and so on and so forth. I mean, this is QR code-based payments in a lot of areas is very, very prominent here. So I would predict that in Asia you would have, from an adoption perspective, a lead to a certain extent, right? And that's also supported by certain country initiatives that you have, for example, in Singapore and Hong Kong, right? Europe tends to be a little bit more conservative. Yeah, they took I would claim the mobile adoption maybe not so high as compared to here, but what they've done very, very well, is the regulatory component. The MiCA framework helps a lot and gives trust and guidance and rule books to the financial institutions. So they're setting the groundwork, and this is something that they've done very well, and I think other regions may take that as a template, right? If we look at the Americas, the US in particular, I mean, there you have a lot of heavy hitters. You have Wall Street, you have Silicon Valley coming, with their innovation on that end, and with the deep pockets to fund and finance that. So there is a lot of leeway to get there as well. And noteworthy also the Middle East. I mean, if you go to Token 2049, I mean, it seems like half the companies are based out of Dubai. So let's see.
Yeah, I agree with Christopher that there's no single region that you can. So there's no single region that I can say that clearly that region is the leader of payment innovation, because payment is ever evolving, and like any region can lead as long as they understand users' needs and they innovate things that can fit their habits, and also that they work closely with the government and regulators and businesses. As for Asia, a lot has been going on there as it's capital markets, and also being a tech-driven hub, and also a hotspot for fintech as well. That's why our headquarters are in Hong Kong, and we have teams across Asia. But then for places like Latin America, like Africa being emerging markets, they, like I said before, like maybe they can pick up new payment methods very quickly. So maybe that could make them leaders in the future for payments. However, I don't think it's good to say that any region is going to be a leader, but we should keep an eye out on the global trends, on where the next big ideas of payment will come from.
Very interesting. What about Job? What do you think?
Okay. Yeah, from my perspective, it's I totally agree with Wang, and that the customer needs is very important. So I can say over 60% of population in the world are living in China, living in Asia. So this is a demand, and also, for example, in China, China is the producing center. For nowadays, it's still a producing center in the world. So it has a large demands and also the scenario for some technical innovation, and also the demands from the scenarios, the real scenario, I think. So I'm afraid in Asia, it will lead the next generation for Web3, and also we can test, we can do the sandbox in each of the countries in different, in Asia. So yeah, this is just my idea.
Cool, yeah, demand-driven economy basically, right? I like to see where the demand is, which region then would probably lead the way. What about Tokyo? What do you think?
Yeah, I think historically we've seen stablecoin adoption, I think, pick up very quickly and very quickly adopted in a lot of the emerging markets. A lot of markets where maybe their native currency was not so stable, not so trusted. Some emerging markets, maybe like Africa, where overseas transfers are always done through intermediary banks. Takes 5-6 business days, right? And unlike, I think, so emerging markets will, I think, continue, I think, being leaders in when it comes to retail adoption. I think countries like Japan, maybe like Korea, where I think the domestic, the financial ecosystem is well developed, I think it'll take more time. A lot of regulatory measures still need to be ironed out. But once it does get cleared, like for example, stablecoin just became available for the first time in Japan just in March of this year. Super late. But I think there's a lot of significant impact that can come from this when we get to start to involve the Japanese capital markets. Right, I think our what do you call it? Financial markets is still third or fourth in the world. There's still a large amount of untapped capital that is unused and just very, very domestic. And I think what stable coins and this access to global liquidity enables for a lot of the money managers in Japan is to kind of expand out and use a lot of that pent up capital into more wider range of securities besides what's available in the U.S., So I think the impact is going to be slower, but when it does happen, I think it's going to be very, very big.
Yeah, it does sound like there's still a bit of way to go for stablecoin to be, if not mainstream, but some sort of, widely adopted payment instrument. So then, looking ahead, I would, be wondering from our panelists, what do you guys think in 3 to 5 years would crypto payments in general, since you guys are innovating in, the payment area, would crypto payments be this, more invisible, with settled on blockchain, be more invisible to a user, or do you think that that's still, having a lot of things that needed to happen in order for that to be a reality? Shall we start with Tokyo from the other end?
Sure. So I think yes. I think that's kind of going back to my what needs to happen in order for stable coins to be adopted by the masses. I think abstraction needs to happen. The retail people don't need to know what chain it's on, what type of USD pegged token it is. They just need to know it's like, oh, I have 100 USD that's allocated here and here and here. It's giving me 10% yield. That's it. That's all they need to know, I think. And it's our job to make that process of bridging, swapping, extremely easy and happen all in the background while the user just realizes this is how much money I have, this is how much I can spend, this is how much is going to be in my savings, in my brokerage. Only one place, just in a simple interface. So I think that is the first step before adoption. So I don't know if it's going to happen in the next 3 years, but we'll try our best.
Yeah. What about you, Christopher?
I struggle with the 3 years, to be honest.
Too soon?
Yeah, I think so. Well, so here's the thing. I mean, we talked about abstraction. I think that's super important, right? And with that comes, in order to become exact, I don't have to think about, will this merchant accept my payment, right? I don't have to think about, I'm going to make payment. What are the steps that I need to do that, right? Is the money going to arrive there, right? Is it going to arrive there safely? Is that the final settlement or things like that, right? I need to be able to, just like I do today with my credit card, I need to tap it on the terminal, yeah? And then the payment goes through. I get a piece of paper and the goods or services are paid for. Yeah? That's how easy it should be. I'm not so sure 3 years is going to be interesting if all these components are going to be put in place. Also the things that our earlier panelists as well we discussed today, yeah, are going to be in line, and all these ducks lined up in order to have that abstraction layer to get that type of invisibility that was asked for. But I'm pretty certain one day we'll be there.
Oh, interesting. I think that you are both saying that one day crypto payments will be as seamless as what we have in Web 2, PayPal or like Venmo or kind of peer-to-peer kind of transfer seamless as what we have today. So yeah, let's see how long it takes for that to happen. That's the only question, right? Michelle, what's your perspective?
Yeah, I also agree, like maybe 3 years is a bit aggressive, but definitely one day users will just seamlessly pay without knowing that as blockchain at the back end. However, for us payment leaders, it's us who needs to know what's going on because we are the innovators and we need to offer payment solutions and to solve problems for users and businesses in terms of payment. So yeah, I think that's what is going to happen in the future.
Job.
If we say in recent 3 or 5 years, I think the stablecoin should still be visible. I think, yeah. But for B2B side, I think within 5 years, it may be invisible. No one need to know in the infrastructure and whether we use the stable coin or the real fiat currencies. But for retails, it still takes time, I believe, from the different regulator framework in different countries. It still need much longer, to see how we can use the stablecoin on retail and everyone can accept it and make the money can move in the world.
Yeah, makes sense. But from all of you, it feels like you are all still saying that blockchain payment will be here to stay instead of, saying that this is a fad, it will go away sometime. So, with that said, I think that this is a very insightful panel. Thank you all for joining me and, on this infrastructure discussion. So, let's give it a round of applause. Thank you.
Thank you very much. Thank you.
Thank you.
All right. Thanks to all the speakers. So it's come to the end. On behalf of OSL, thank you once again for being here with us. We hope today's forum has deepened your insights and perhaps even set your partnership. So have a wonderful evening ahead, and let's meet again very soon in Finternet. Hope to meet you guys in Hong Kong.